Hey everyone, welcome to another episode of On the Record with me, your host, Tone Vase. And we are doing an episode we were supposed to do a few days ago, but due to a scheduling malfunction, we are bringing it to you today. So I'd like to welcome my guest, Richard Hart. Go ahead and say hi, Richard.
How's it going, guys? Hello, YouTube. Richard Hart. Richard Hart Win on Twitter, cfttoken.com. How's it going?
All right. Of course, I don't really need to introduce myself. I've been doing way too many videos lately as it is. We're going to jump right into it. I'm going to try and keep this to an hour or so, but probably not going to happen. And let's see. So, Richard, so you came on the scene recently, right? Like this was probably last year. No one really knew who you were before 2017 in the crypto space, correct?
It depends on what you mean by the scene. So, I met Adam back and
public scene, like YouTube and Twitter followers, like public scene.
Yes, it's like less than 6 months, I think.
Okay, and but before that, you're mentioning Adam Back. So how were you affiliated with Bitcoin prior to people knowing who you were?
Well, I started mining in 2011, and I was onboarded by Art4s in the IRC channel when GPU mining just came out, because I was retired and I had a lot of video card power. It was, because I played a lot of games, I was addicted to it. It was very easy for me to use my 5970 dual GPU to just mine Bitcoins. So you can mine full blocks with no pool, right? Like 50 BTC rewards. It was really fabulous. And then GPU mining died. And then you'd go to the trade shows, and it's pictures of me at the trade shows, and everyone was trying to figure out what to do because it wasn't very easy to make mining work anymore. It was the times were changing, basically.
All right. So you were mining back in the day of 50 Bitcoin block rewards, basically.
Yeah. Yep.
And all right. So you've been a big diehard. I actually want to start off with the topic I'm most interested in our conversation, which is when I became familiar with your work. It was when you came on as a guest on Vortex's show on the World Crypto Network, and then you and I were joint guests on a couple of shows on the World Crypto Network. And I saw you as a big-time Bitcoin maximalist that hated all of the other altcoins. And that's the that was my first impression. That was my continued impression. And over the last, I would say, month and a half or so, or pretty much over the last month, I've been getting lots of comments about, hey, Tone, what do you think about Richard Hart? He's no longer a Bitcoin maximalist. He's buying altcoins. He's shilling altcoins. And my answer was, I don't know what Richard is doing because I don't have time to follow people pretty much. So I figured what better than to have you on here to explain your position of being a diehard Bitcoin maximalist for 7.5 to 8 years, and recently, being very frustrated with, well, I don't know if you're frustrated with yourself for doing that or with the space for forcing you to change your mind.
Well, basically maximalism died with forks, right? So as soon as the Bcash fork hit.
Okay, yeah, so that was the other question, right? What is your definition of a fork? Because some people think Litecoin is a fork, or you're taking it to Bcash.
Right. So if you consider UTXO set forks, right? So for instance, Litecoin is a fork of Bitcoin. However, they didn't fork the UTXO. And UTXO just means unspent transaction output, which just means
the history of transactions.
Right.
The history of transactions.
Exactly. Well, it's more than it. It's the history plus your ability to spend in the future, right?
Right. So, and I try to break these down to the layman's possible explanation.
Yeah. I'm telling my viewers to go to your channel because for some reason my sound's not working.
That's not good.
Sorry, guys. I'm sorry my sound's not working.
You're usually good at that stuff.
Yeah. The software usually does the same thing over and over again, but not today. So once the Bitcoin Cash fork came out, you were given coins whether you wanted them or not, and now you can either dump them and punish the forker and not reward miners leaving your network, or hold them and reward those people, right? And then more and more forks came out to the degree where there's like a cold storage index of how much a Bitcoin costs that's sitting in cold storage. And if you count up all the fork value that's in there, you're going to end up with a lot of money. And so whether you want to be a maximalist or not, you've got so much money from forks that you really have to play the game. You don't have the option to not care about forks. You're going to be installing other wallets. You're going to be seeing what exchanges have things, right? So maximalism died with forks, period.
I can disagree with that. I can debate that a little bit. So just like with Bitcoin and with altcoins, the first batch of these, what are we calling them again? The hard forks? The first batch of like fork coins.
UTXO hard forks.
Sure. The first batch had a big splash, but that's it, right? Like the latest ones that are coming out are being ignored. I actually sold my Bcash immediately. Well, not immediately. I thought it was going to be all about nothing, so I wasn't even prepared to sell them. The moment that thing became viable and valuable, I sold all of mine. I think I sold them on week 2 or week 3, and I increased my Bitcoin holdings by 10%. So I sold them at 0.1. I sold them all, and I was very adamant all over YouTube that you cannot support this thing. The faster it dies, the better. Now, my voice wasn't big enough to actually achieve that goal, and I know you regretted not having a bigger voice in helping in that regard. But after that, they all have not been all that relevant. I mean, Bitcoin Gold is worth 1% of the value of a Bitcoin, and that's the second biggest one besides Bcash. So, and all the ones going forward, I don't understand. I'm not scared of anything else, because the guy with the biggest megaphone is Roger Ver with Bcash, and you're not going to get a bigger megaphone guy trying to promote your fork.
Yeah, well, I mean, mathematically, the longer these projects exist, the more and more value will accrue in the forks, because it can only go up, can't go down. You'll never get negative.
Yeah, but I know, but it's going up at a decelerating rate, and it's decelerating pretty damn quickly. And like once Bcash goes back to 5% of the value of a Bitcoin instead of 12% it is now, the value lost in the drop of Bcash from 12% to 5% will be greater than any value cumulatively I expect the forks to gain for the rest of time.
Well, I mean, you said that you dumped at 10%, which means that you used their network, which means that you rewarded the exchanges that integrated with it. You didn't get to pretend it wasn't happening, right?
I wanted to pretend, but I was greedy for 10%. I'm pretending all the other ones exist because I need a minimum of 5% to care.
So if not if you had 10 times more money, right? So if you had 10 times more Bitcoin, your flat amount you'd care about would be at a 10 times lower.
I don't think so. I really don't think so, because like the effort that it would take, and in fact, actually, if I had 10 times the amount of Bitcoin I had, I may have ignored this 10% windfall because I would be more scared to dox myself technologically that I have that much Bitcoin.
I hear you, but I mean, if you want to use your Bitcoin at all anyway, you need to understand countermeasures, because I mean, so I had a GIF contest, who wants to make a funny Richard Hart meme. The reward was $200, and the winner I didn't pay with Bitcoin because I don't care for people to know how many I have. So I paid them in Monero. Now I don't have to worry about anyone knowing how many Bitcoin I have. So like, if I had to pay him in Bitcoin, then I would have had to take extra measures to shield my net worth from him, right? Whether it's a Tumblr or buying from an
no. I mean, why for a $200 last minute spend? Why would you go into your cold storage of your actual savings? I mean, shouldn't you have a wallet on the go with a few thousand Bitcoin?
Well, a few
$1,000 worth of Bitcoin. That's a big on the go wallet if it has a few thousand Bitcoin.
if you have, the past never goes away, right? So if you've ever gone and split your coins and then put it back into storage and then broke some off for hot wallet use, they can still track it back.
No, I agree, which is why I was like very, very like, oh man, like I was very nervous about cashing out that 10% because I had to take Bitcoin out of storage that's been in there for a couple of years, right? And it was basically completely off the grid. In fact, I had to literally like go into a backup that I had no intention of ever using because the computer that it was on originally had died. So I had to learn how to literally take my Bitcoin from a backup, which is, a good practice to know how to do because I've never done it before. But yeah, that's exactly right. Like you dox yourself by trying to get all of these forks. And it may not be a good idea, which is probably why a lot of Bcash was never redeemed because some people aren't willing to do that even for a 20% increase.
Well, if you sell your fork coins earlier and you buy more Bitcoin, then you get more new fork coins when the next fork comes out. It's like a snowball, right? If you keep your fork coins and you don't sell it for real Bitcoin, you don't get more fork coins when the next fork coin comes out. So the concept of dumping forks for real Bitcoin, particularly if they're going down in value, as you say, maybe the next one goes up in value. Maybe a good one comes out.
Right. But now it sounds like you're contradicting yourself, right? Because now it sounds like you want to dump these things immediately in order to take advantage of all of them versus holding on to the same coin while getting forks from each coin, right? They're two contradictory ideas of forks.
No, you're time shifting where your rewards come. So if you dump your Bcash on site at 10%, then you got 10% more Bitcoin.
Yes.
Then when B Gold came out, which I think was the next larger fork,
right,
you got 10% more B Gold.
So not 10. No. There wasn't that much. That's what I'm saying. Like, right?
No. You got 10% more B Gold because you had 10% more Bitcoin because you dumped it earlier.
Sure.
So if you dump earlier forks, you get more of later forks.
Sure.
So you're changing timing, right?
Sure.
If you don't dump earlier forks, you don't get more of later forks. But these forks are never going to stop. They're going to keep coming.
But they're going to be more and more irrelevant, and that's like one of my points.
They found a scammy pump and dump way to make them work. So if you saw the B private fork,
that's the thing. I haven't. I know nothing about it. I think it happened yesterday. Okay. I don't know. I don't care. Wake me up when it's over 5% of Bitcoin's value.
I have no idea what the value is.
Right, exactly. And you're proving my point that you no longer care about these forks, and Bitcoin private is like the next biggest one, and neither you nor I even know when the hell it happened.
Yeah, look, I'm a Bitcoin maximalist. I like Bitcoin the best of all of the currencies. I also know there's things it can't do, and it probably won't ever do. So if you want to send money to people and have them not know how much you have, use Monero. And it's not just not how much you have, but also when you did the transaction, what your IP was when you did the transaction. There's honeypots of chain analysis tools on the Bitcoin network, and they see which node broadcasted your transaction, and they can kind of geolocate you, right?
Right, but again, like the smart people, do you believe that the smartest people are working on Core?
Yeah, for sure.
Right. So do you not think that they're going to solve that anonymity problem?
No. I think they're going to try. I think they're going to write the code. I think it's never going to get forked in. So if you saw how hard it was to get something very not controversial done compared to anonymity. So like
SegWit was pretty controversial. I think SegWit is going to be it will be a little bit more controversial than anonymity.
What? No. Like, okay, if you're Coinbase, right, and you're hanging on to your bank account by the thread, you're like, please God, if we lose this account, we're dead, right? Because no one will onboard banks. No banks will onboard crypto companies. So it's life or death for them to keep their bank account. What do you think the bank's going to do when Coinbase can't cut off people for any reason anymore, right? So like Coinbase right now.
Well, Coinbase runs a bad business. Like, and Coinbase will have no say in this whatsoever. I mean, we can debate whether they will or they won't. Coinbase has been on the wrong side of every change of Bitcoin, and they've lost every time.
I don't like Coinbase either, but to say that adding anonymity, which threatens the raw existence of every exchange, isn't going to be more contentious than not changing anything except the block size. It's pretty obvious that people are going to care a lot more about the whole shut down all Bitcoin onboarding from banks, because banks can't do the like multi-level KYC AML stuff anymore. It would be more controversial. So let's say it's not.
Yeah. Okay. I actually don't. Well, let me back up here. I actually don't want anonymity at the protocol level. I kind of want it as a layer on top.
Okay.
And Coinbase doesn't have to use that layer.
All right. Yeah, that's fine. So like my point is, there are things Bitcoin cannot do and may never do. And even if it may do it one day, it's going to be a while. One of them is anonymity. So you need some form of anonymity token currently. Another one would be microtransactions. Lightning isn't enterprise grade ready to use yet.
Agreed.
Can't wait. Burn on, kick ass, right? A lot of people working on it. That's fabulous. But it's not here yet, right? And then, my token doing useful proof of work. Like,
we'll get to your token. All right, sure. So let's not yet though. So all right, so let's move on, because this may actually take a while.
Sure.
So what are your thoughts on? So you hated Ethereum, and recently I've heard your other interview where you are now all of a sudden, more open to Ethereum, and I understand why, because Ethereum, you agree that Ethereum is not technologically stable, and the probability of Ethereum succeeding long-term technologically is a huge risk.
Well, I wrote an article called "Why Bitcoin Will Always Be Better Than Ethereum." Click it, read it. All those things are true. So when you write code, the law of the land is bugs. So if you write code that is financial, you are going to have bugs. And if you can't revert the system and change history, you're going to have bugs that lose a lot of money, and the money stays lost. So because Ethereum is Turing complete, you have the maximum rope to hang yourself with. And if you choose to use exciting contracts or unaudited contracts or contracts that haven't been around that long, you're likely to be the guy that gets screwed first discovering what the bug was. So the system is not as secure as Bitcoin's system. However, it is whooping the ever-loving ass of Bitcoin on some things that really, really matter today in crypto, which is tokenization. So if you want to launch a new coin that competes with Ethereum, you know what you do? You launch a coin on Ethereum and then airdrop the holders later on a new network, right?
Yeah.
So Ethereum is literally the best place to create new Ethereum competitors, right? It's also
there are competitors to Ethereum, right? There is Tezos, how that works out, or we already know there is what do you call it? Waves. There is Neo out of China. There is EOS. There is
these things don't exist though, right? So like, as a person that's launching a token, I care about installed wallet user base, right? How many people are going to be able to use my token with the wallets they've already got installed? How many exchanges are going to be able to turn on the token without asking me to audit my EXE with their dev team or whatever? How many people are going to screw up sending the token around because they have to learn some new protocol or system? If you use what the industry has already standardized on, you're going to have a way better user experience for everyone involved, including the exchanges. Like there's very, very few reasons to use some new experimental competitor with less of everything, less audits, less people that have already found the bugs,
Well, I agree. I mean, all of the Ethereum competitors are even worse than Ethereum, and they're just trying to capitalize on Ethereum's pre-sale model of a token that doesn't yet exist, which is Ethereum's use case of creating for others what they actually did themselves. I mean, it's a whole house of cards, and then you have tokens launching on Ethereum that are gonna themselves support other tokens. It's just a house of cards building on itself until Ethereum implodes from multiple directions.
I thought that, and that was my prediction as well. I predicted there'd be a race for the exits, and all the ICO holders would try and dump and get out of their positions if there was a big crash. And then the opposite happened. So when there was a big crash,
what about the Dow, right?
No, I mean this recent 345% drops in 50 days garbage, where we're still down.
I don't think that's big enough. I think we need another Dow moment.
Well, Ethereum dropped only 30% from its all-time high. It may be more now. I haven't looked at it recently because I don't own any. However, Bitcoin dropped 60%. We took a much larger hit from our all-time high. That could have been timing because we were beaten up on Ethereum for so long in the run-up. But that race for the exits that I predicted, it didn't occur. And the altcoin taking over Bitcoin because of potential greater gains, that also didn't occur. So, right now Bitcoin's showing relative strength. When the stock market's going down, it's going up. And if it goes up, altcoins go down. If it goes down, altcoins go down. The only time that altcoins seem to pump post January 1 of 2018 is when Bitcoin goes sideways. It hasn't really been doing a lot of sideways. So I'm happy to be, all in Bitcoin. And I'm happy to have, not seen altcoin winter occur. And the reason I coined the term maximalish is because I think the vast majority of these tokens should never have been created, have failed business models, are going to waste everyone's time, eyeballs through marketing. It's just all around bad. Most of these projects should never have been done. And if they ever do get done, will just fail. So I like Bitcoin for store value digital gold. Right now, I think Ethereum is the leader in, tokenization, doing new token things. And then you need something for anonymity. I think Monero is the best of breed currently because Zcash, only 3.6% of it uses the shielded function, and it's got a 20% pre-mine overhead founder's fee, and it's got a trusted setup that you can't really trust because you can't even detect inflation in the system. So it's like, we need Monero for now. We need Bitcoin for now. I think my token is going to be the useful proof of work play. And then you don't really need so many other tokens. If you want to do microtransactions, you could risk it on Lightning. You're not really risking much. They're microtransactions, right? Or you could do it on Dogecoin. Like, you could do it on anything that has really low fees. So you can't do everything on Bitcoin, and you may never be able to. So that's why I'm a maximalish. Mostly Bitcoin, but some other stuff's legit.
All right, so I do have the chart of Ethereum up, and this is Ethereum against Bitcoin, which is what I kind of care about. I don't really care about Ethereum versus dollars. Do you agree on that, or should we be looking at Ethereum and dollars? Or the Ethereum Bitcoin ratio?
If you're just comparing Bitcoin to Ethereum, I think the BTCF pair is fine.
Perfect.
But so you won't see a downtrend. Like, just looking at this chart, if Bitcoin went to $1, you wouldn't notice it because Ethereum would just track with it, right? So,
but potentially, right? But you can see how like Ethereum bottomed against Bitcoin in December when Bitcoin was pumping, and we both, we did that episode about Wall Street getting in, and we both had a very similar outlook. I think I had a slightly less pessimistic outlook, and we'll talk about that in a minute. But Ethereum bottomed in the vicinity of Bitcoin's high, and Ethereum topped in the vicinity of Bitcoin's bottom. So they are trading a bit, negatively correlated.
What date is the bottom on your chart there?
So the bottom is December 7th, December 8th.
They bottomed at the same time.
What do you mean?
That was when Bitcoin died.
That was when Bitcoin hit its top, and like,
my bad. I'm confusing it with January. Sorry.
Right.
Never mind. I don't have a chart.
No, that's fine. But you can see mine, right? So the Bitcoin's high took place December 17th. And that's when Ethereum hit its low. This is when Bitcoin was grossly outpacing Ethereum, right? So Bitcoin's going up way faster than Ethereum. So we have Ethereum hit its low a week before Bitcoin hit its high. Because Bitcoin tops here on December 17th, right? Now,
the thing that you're mentioning there is why I'm saying it may have cloaked the actual drop in price of Ethereum, because we were beating up on them so hard that when the big dump came, they didn't have to dump as far because they had already been beaten up for so long. You know what I mean?
Because look, it's not that they've been beaten up. It's just that I think that the over-optimism of Wall Street getting in, and you were part of that optimism.
And I was right up until Christmas.
Correct, right? And I was cautiously bullish. Like, remember, I called the top at 7,500 for the year, and anything above 7,500 over the following 30 days drove me insane because I felt that Bitcoin did not belong above 7,500. So when we finally topped on buy the rumor, sell the news, which again, I should have, warned my followers better.
The second news. Because we pumped for CBOE.
Correct.
The second news we dumped for.
Correct, right? So
tricky.
Right. So basically, I felt that, Bitcoin going to 7,500 in October or November, whenever it got there, I felt, listen, that's already a slightly overvalued Bitcoin. The pump, I don't think Wall Street caused it. They caused it mentally. I don't think Wall Street caused it physically. I don't think it was Wall Street buying a Bitcoin. I think it's people. Sorry, say again?
They bought a lot. The OTC desks.
They bought. I agree. They bought a lot, but I don't think they were the main cause. I think the main cause was the fact that people believed that they were buying a lot made everybody else buy in. Right. So
it's a bubble market, right? I mean, everyone gets hot. Hey, it's going up. It's going up faster.
Correct.
It's going up faster.
Correct.
Better get in.
Correct. So basically, after we turned from 20,000, I mean, I didn't actually perfectly call it. My technical analysis charts didn't line up all that great. I have multiple podcasts, including with Van Zen and a couple of other, technical people that also, got, their technical charts got out of whack. My technical charts got out of whack. I might have got a little bit caught on that secondary bubble to 7,500. But the overall point is the drop from 20,000 all the way back to 7,500, which was the high I expected, did not bother me at all because I felt that, oh man, all right, we have removed the overexuberance that should not have been there. And my view on it is, if today we were at the current price of Bitcoin of 11,000 or wherever we are, 10,500, and this was the new all-time high, everybody would be happy as a pig in shit.
Well, I kind of hope you're wrong about the overexuberance, because if you look back on the chart, the law of the land was 40% drops and no farther for a couple of years. And so if we're really supposed to be at 7,500, well, then maybe the 40% drop from there is what would bring us to normalcy.
Perhaps, and it's possible.
That for 7,500.
Right.
I don't want 50 Bitcoin or whatever.
Perhaps, right? So to me, looking at the Bitcoin chart, where is it? Looking at the daily Bitcoin chart, I'm not completely sure that 6,000 is the bottom for the year. But if we pop back up to about 12, 13,000 over the next few weeks or in the next month or so, I will be pretty confident that we have bottomed. And yes, it wasn't a 40% drop. It was more like a 70% drop. But to me, the other drops were much lower than they were supposed to be. The drop from 7,500, I expected to go to at least 5,000, and that came up short. It quickly reversed from 54. The drop from 3K, I called fairly well to 1,800, But ideally, I wanted the drop from 3K to go all the way to 1300, and my 1300 was never retested. So to me,
There's a couple never been retested. We also had a miss at around 5K. There's a gap. 1170. There's a gap. There's like 3 retests that we just never got back to.
Yes, I agree. And I think all of those retests are just coming up due. Now, this doesn't mean that Bitcoin is broken. This doesn't mean that Bitcoin anything is wrong with it. It actually means that people are more optimistic about Bitcoin than the reality is giving them. And I am perfectly okay with this. In fact, I would have been okay if we'd fallen even more. And throughout that move, I did not sell any extra Bitcoin that I needed to pay my bills.
Good move. That's good. I mean, that's the reason that Warren Buffett tells you to not just own securities, but to have 10% in bonds, so that when the shitty downturn comes, you're not selling your securities at really low prices because you just have the cash coming in from the bonds. So it's nice to not have to dump at the low.
Right. So the question that's on everybody's mind is, how much did you get hurt on a bullish trade that got you very, very upset?
The problem isn't like I'm rich and I'm going to be rich forevermore. So that's not what bothers me. Like what bothers me is when I've got, 25K BTC Richard Hart as my name, and I spend 16 hours a day tweeting bullish BTC things, and I've got friends that have borrowed money to buy it, and I'm making really good price calls. I put all my price calls on a chart because people like to talk shit. They're like, bottom seller. You're like, no. I publicly said enter all fiat markets, a play on the exit all fiat markets story, exit all crypto market story. I publicly did that at 8,500. And then we went to 6,000. So if my warning before a 30% drop isn't good enough for you, I'm sorry. I wish someone would let me know before the 30% drops, right? And then I publicly said, hey guys, if you want to rebuy at 7,500 now and lock in your $1,000 gains and say, give you a good call, do it. I still think that we're in a downtrend, and I don't think you need to chase the market. However, if you want to lock in a grand, do it now. And then at 8,500, I got re-bullish again because I saw that we diverged.
So, this is what we're talking about, right?
Yeah. Yes.
Okay. So you're talking about right here. That's 8,500 here.
Right. That's when the divergence came in. So earlier we dumped when Wall Street dumped, when the VIX died, and then we went I guess the inverse VIX died. Then we diverged and we went up when Wall Street went down. And then once I saw that behavior, I was like, yep, well, this will probably continue. And I got bullish again at 8,500, which is the same place I got bearish before. So I'm very, very comfortable with my public calls. And the only call on that list that you'll see that you would have got beat on is the tiny bit where I say Bitcoin should be good for a couple thousand bounce here. When we had a huge volume capitulation, we had
the drop to 7,600.
Yeah,
right. I also thought something similar, but there was low volume on that bounce and it didn't hold. So I changed my mind very quickly that another big drop is coming. And
it looks low volume now, but it wasn't low volume then. It was very high volume then.
It was. I wouldn't say very high. I'll show it.
Big candle. It was candle. Go to the 4 hour, and it was a bigger green candle.
But I'm care about the daily, right? And here is that candle on a drop to 7,600 on a daily chart, and we're talking about this red volume spike, which is fairly high. Okay, I'll take that back. But the following candle had no follow through.
You can't wait till the daily candle closes to be like, all right, now I've found the bottom. No, that's just like.
Yes, that's what you're supposed to do. That's what you're supposed to do. This is luck. You only get 1 hour to get the bottom, and that's luck.
You can see, I call bottoms good as fuck. You can see in the price action the divergence between exchanges. Like there's a ton of ways that you can get a good ass bottom without waiting for the daily to close. And
Well, No, I agree. You could have done it, and I've done it. I called the $5,000 top to within the hour
You
of
called
it
the $3,000 bottom too.
The which
It's
one?
doable. The $3,000 bottom you got too.
Oh, I called it perfectly to the
I think
hour,
you
right?
called it 2950 or something. I think you called 3K and it went 2950. It was a good
Yeah. Yeah. I called some of them very well, but if you're going to be a risk-averse trader, you do have to wait for the daily to close. You're not going to get the bottom, but at least you'll have a safe trade.
If it depends on what kind of trader you are, right? You've got scalpers that are looking at the minute chart.
Oh, of course.
You've got intraday guys that'll do 3 to 5 trades a day. You've got guys that just wait for the daily. They all work, but if you want to be a bottom caller, you're going to have to be there during those minutes. The minute chart matters,
Right. And you have to be willing to be wrong, right? And you have to live with it. I took an unlimited amount of shit for saying there's no way 10,000 was going to hold the price up, because people were telling me we're building a base at 10,000, and I was saying that means we're about to crash to 75. And people thought I was insane, and then we did. Again, so what bothers you more is people are overstating your slightly wrong calls. You seem to be taking this very personally.
So there's lag, right? So a person will watch your YouTube channel with a call you made a week ago and think that's your current position, because they're fucking stupid. If you care about Bitcoin price, it changes by the minute, right?
I agree. And before I got into, and here's the difference, right? This is what I tried to explain to Vinny Lingham, and this is what I try to explain to other people. See, I've been a trader for 10 to 15 years. So I am capable of dealing with that, and I have experience of dealing with that. But a lot of people come into this Bitcoin predicting game, and they don't realize this is the kind of shit that you have to deal with. And I don't know what your trading experience is before Bitcoin, but this could be one of the things where I know how to handle it and be able to deal with these kinds of trolls.
So what bothered me about Bitcoin was I was okay with the greater than 40% dip. That's great. That was fine. I wasn't okay with not bouncing that high. And I wasn't. So if you chart the correction and the recovery that we've had now, it's worse than what we had in the 2014 bubble. That sucks. Our recovery is worse. I don't like that. And we also didn't have.
Sorry. Our recovery over the last month and a half is worse than the 2014.
Yeah, we were already. If we had.
I disagree with that.
Well, I've got the chart. You just use the bars tool and copy the old price, drag it to the new price. And
I mean, I'll go back to log and I'll just zoom out my chart. I mean, we had 2 incidents of capitulation back in 2015, and we were literally dead at the bottom for 6 months before we reversed.
Well, go to the double top at
here's the double bottom. Here's the double bottom on daily. We had a capitulation, then we did nothing for 6 months, then we had another capitulation, then we did nothing.
You're looking 6 months out. We're only 2 months out. Go to the 2 months out time frame on our last recovery from our giant double top Mt. Gox failure. Price should be
You want me to go back further?
No, I just want you to go to 1250. See that double top right there?
Sure.
Measure from that double top to the recovery.
To the recovery.
Click shift. Yeah, hold shift. Left click the second peak.
To 20,000.
No. Just hold shift. Left click 12 that, and then drag down to that red line you see. Your dynamic trends line there.
Oh my
whatever
God.
your red line is.
Click
hold shift. Do that.
Where am I going?
There you go. Up to that red line. No, up to the peak of the recovery.
The second recovery, this one.
That we were only down 20% 30 days later. No, go right.
Here.
That one, yeah. We were only down 20% 40 days later.
Sure.
We're down way more than 20% now.
But here's the thing, right? No, but you're comparing the wrong points, right? So here it is, there, right? That secondary bull trap high, right? You're down 20 20%. Now, if I go to the current environment,
we're down a lot more than 20%.
Oh no, but you're not comparing apples to apples, right? You're comparing it based.
Just copy that whole section.
But wait a minute. That thing that you drew, I'm going to draw it right here, and I'm going to draw it from the top to the bull trap here, and that is only 13% in approximately, I mean, sure, a little bit less time, but that's only a 13% drop. You got to compare it by price. It's not necessarily by time.
If you're okay with the 345% drops in 50 days, there's not much I'm going to be able to say. I mean, it's terrible. It's bad. It sucks. But the good news is a lot of margin traders aren't in the game anymore because, you know, everyone that long.
It doesn't suck that bad. I mean, look what I'm wearing.
No, if you didn't close in profit on the first and second dips, you got liquidated on the third dip. Period. If you were over 2x.
I mean, yeah, I mean, you have to recognize the signs. And look, there is a reason why I have the word bull trap written there for a reason. It even got me a little bit fooled because of how much higher it went due to the previous. Can you write
bear trap on the current time frame so our price can go up, please?
Wait, say again?
If you could write bear trap down at the current time so we could get the price to go up, that would be fabulous.
But that's the thing. I haven't seen a bear trap, right? I really haven't. Like, the only bear trap was like, I mean, over here maybe, but I picked that one up. The only thing on this entire chart that like got me a little bit fooled was literally the bull trap, which is why I want to make sure that for the rest of time, people know that I got a little caught up in this bull trap because once we went higher than this high, that's what separated us from what happened in, well, I'm back at the linear chart. Hold on, I have to go back to log.
Just click auto.
Oops, I have to click into log.
If you click auto, you're going to be happy. Trust me.
Thank you. Yeah, no, I'm not going to be happy because I then screw up.
Go to date. It's right above strategy tester. You just type the date you want.
No, here we go. I got it. I'm here now. Right. So the big difference for me was that you see that secondary high back in 2014 was not significantly higher than it was on the first go around. Yeah. That's what got me caught up in the bull trap because I saw absolutely no resistance at that point. And yeah, if you put in a bunch of bullish trades here and you didn't properly set your risk management, yeah, you lost some money. But if that's the only bad trade you made on trading daily candles, you should have been fine because after that, I called the downtrend pretty damn well, and other traders did as well.
So where do you? I think that as long as we're showing relative strength to other altcoins, and to the stock market, and we're still at 50% of all-time high. I think we might be at 11K now. So we're more than, we're only 40-something% from all-time high. As long as those things are the case, I'm happy to hold Bitcoin spot. I'm not advising people to go margin long. I'm not, it's not. We're even fighting the resistance at 11K pretty hard.
Well, no, I agree. I've been talking about this cluster of resistance for weeks now, and I never advise people to go margin long. I never advise people to go short, but I never advise people to go margin long. I explain to people that the only reason to ever use margin at all is if you're worried about the exchange risk. That's the only reason to ever use margin in Bitcoin trading.
Oh, man. Taking 3x longs on those dips. If you 3x long a dip, you triple your.
But if you're wrong, you're going to lose your whole account, right? Like again, the only reason
you can tight stop it.
You could, but like Bitcoin, it gives you lots of leverage options. All right. So as of right now, what's your outlook for the Bitcoin price?
I think that there's enough shorts open that are weak and won't be able to defend their position, that all these these new larger players that have to buy in because noobs are throwing their money into index funds. They're just buying baskets of currencies. I think that those index funds and the fact that we're so low from all-time high and the fact that the shorts aren't going to be able to defend their positions is going to give us a nice short squeeze.
I agree, other than I don't believe we're so low from all-time high. And like I said, if you asked me, 18 months ago, where would Bitcoin be today? I probably would have said lower, a number that's lower than the current number. So I actually don't think Bitcoin is that far undervalued. Now, compared to all of these altcoins, I think Bitcoin is grossly undervalued. But that more goes to my position that all of these altcoins should be at zero, and Bitcoin should probably be lower than 10K. But because all of these altcoins are sucking up 60% of Bitcoin's total market cap, or the total crypto market cap, then Bitcoin is like, it's a weird position to take, that I think Bitcoin is grossly undervalued compared to altcoins, while at the same time overvalued compared to its relevance in the global ecosystem.
So that knife cuts both ways. We hit all-time highs when alts hit all-time highs, period. So it turns out that the main primary reason people buy Bitcoin and Ethereum now is to get access to altcoins, which is why they have a larger market cap. So imagine
not as much anymore, because a lot of these things can just go through Tether or go through Ethereum or go through other stuff.
You can't get Tether without. I mean, there's one place in the world you can get Tether for cash, maybe two. Well, I think two. Kraken trades the USD Tether pair, and Finex just makes them, right? Because they're owned by the same directors, kind of thing, run by the same directors. But other than that, if you want Tether, you need to trade to crypto first, right? So even if you just want Tether for some odd reason,
right? But you don't. But you no longer have to go through Bitcoin to get it. That's the other point.
You almost do, right? So if you take Coinbase, you've got 4 options, and the option that has the largest liquidity that you get hurt by slippage in the order book the least is the Bitcoin option, right? My position is if altcoins all disappeared right now, the price of Bitcoin would be crushed. Because what you're doing is,
I take the opposite of that.
Yeah, well, I mean, I'll explain.
Because the only way for all those altcoins to disappear is if people start selling them frantically. And where are they going to go? They're going to go into Bitcoin. So they're going to drive the Bitcoin price up by exiting those coins, right? Because they can't just disappear, right?
But that's what we're seeing now. So that's what we're seeing right now, is because we're in a relative downtrend. If you draw your trend lines, they're pointed down. That's where we're at right now. We've only got local short-term uptrends, and they haven't even stuck, right? If they were sticking, we'd be at new all-time highs now, right? But they're not.
We're talking like total alt.
Well, I mean, we were just at 11.7 a couple days ago, and now we're not at 11.7. So why the fuck do we
okay, so let's talk about the same thing, right? So here's the chart of. I'm gonna zoom in a little bit, right? Let's go to 2017, right? Because that's where all of the altcoin shit started. So I'm going to put this on 2017, and I'm going to put this on 2017. Okay. So the top one is total crypto market cap. The one below it is the total crypto market cap excluding Bitcoin. They look virtually the same in shape. Okay.
Yep.
Now, to me, the interesting thing is this: Bitcoin was gaining a lot of its total market cap versus altcoins into its bubble of 20,000.
Yep.
When Bitcoin crashed from 20,000 down, altcoins gained more momentum.
And then they lost it.
And they're losing it now because Bitcoin is starting to go back up. Right?
Yeah, so that chart is misleading because it always adds up to 0. If you wanted to do that comparison,
it adds up to 100. It adds up to 100, but yeah.
Right. So the reason that chart is misleading to humans is because we're used to looking at comparing 2 things versus the dollar, not comparing 2 things subtracted from 100, right?
I mean, I'm already used to it, but yes, to most humans, it's a problem.
If you take those same stats and you chart them versus the dollar, then you're going to see the percentage movements accurately, right? Because like on that chart, Ethereum could go to 1 penny and Bitcoin could go to 2 pennies. And you'd say, man, Bitcoin's kicking ass. Look at the dominance, right?
Against Ethereum, sure.
Well, no, the chart wouldn't show you that the whole market was fucked and everything was a penny, because the ratios would still be. Right?
Well, I know, but in my head, I know I know the price of Bitcoin like on every month, probably in its history, right? So in my head, I know exactly what the price of Bitcoin was all along this chart, and then I judge from there.
So I'll give you other reasons you don't want to chart. So you don't want to chart the dominance chart. It's mathematically in error. If every new shitcoin comes out with PDF that's worth 20 billion, you're not going to have Bitcoin at 20 billion market cap to compete.
I know that. I know that.
Right.
And
so
theoretically, that's a problem, but realistically, it's not that much of a problem, right? Like this chart is telling me that when Bitcoin rises over the last year, Bitcoin does gain. I mean, we did have here, like Bitcoin was still rising in the beginning of the year, but altcoins were exploding. Ever since then, the altcoins have not been exploding, and the relationship is back that when Bitcoin rises, altcoins fall. When Bitcoin falls, altcoins rise. Over the last 6 months.
But they don't. They don't, though.
In relation to Bitcoin. The whole market cap is slowly growing, and you can see that here.
There has to be dollar signs. The y-axis needs to be dollars or percentages, or I don't give a shit about the chart. This chart will mislead you. Don't trade this chart.
All right, no, I'm not saying you should trade this chart, but this goes to my point that altcoins can't just disappear. There will be a panic out of those altcoins if they are to disappear, and that would drive the price of Bitcoin higher, not lower.
As long as Dogecoin is here, nothing's ever disappearing, ever. A comedy coin.
But Dogecoin is, to me, Dogecoin has disappeared, right? Because if I look at the all-time,
actually, $100 billion market cap.
I know, but look, like this is what I mean, right? Like if I look at the all-time history of Doge, in terms of its value towards Bitcoin and not its value to the dollar, which has recently gone up a lot for reason God knows why, right? So in its relation to Bitcoin, right here, like when Doge reached its peak of 1 billion or came close to whatever $100 million, the exit out of Doge, that money had to go somewhere. Now most of it will disappear, but enough of that money flows back into Bitcoin.
So you think that there's a world where altcoins all just die?
Well, to me, Doge has died, right? Just because it's trading at some value.
So even though all altcoins have a larger market cap than Bitcoin, you consider them dead?
Not all of them. There's still some of them are a bigger pain than others. But like again, we can look at my favorite altcoin of all time, Aurora Coin.
You're cherry picking a little bit there, man. It's not representative of alts in general.
In my head, it's a perfect representation of every single altcoin, right? Because that is the future of every single altcoin. It's only a matter of time.
As a guy that is heavily in BTC, I hope you're right. However, I think so. Here's your two things that give Bitcoin value. One,
or Paycoin. I'm sorry, I'll give you Paycoin as well. That's another one of my favorite altcoins of all time.
It looks epic. One, people are buying Bitcoin as a digital store of value. That's great. Two, people are using it as a currency. Not so much. Three, people are using it to fuck around with altcoins. Of those three, I think three is bringing the most liquidity. I think three is bringing the most new money. And I think three will continue to bring the most new money.
But which one is the most important?
If you care about price, three. If you care about cypherpunkism, one.
Right, and I think it's one. Like again, if we're talking hedge funds, it's one. It's not three. People have a misrepresentation of hedge funds.
I hope you're right, but why do they keep doing indexes instead of just buying the real thing? Why do they keep buying the fake things?
Actually, you don't know what they're buying. Like a real hedge fund is probably holding it in cold storage.
Half these tell you in the prospectus what they're going to buy. They buy shit. They have no choice. Like if they buy anything other than Bitcoin, they have to buy to some degree shit, right?
Like, but the real hedge funds, if they are in Bitcoin, they're holding. They're part of one. Okay. Now, do you feel that there's any other competitor to Bitcoin in terms of one store of value?
Digitally, no. Digitally censorship resistance wise, no. Digitally fiat currency wise, the normal.
No, not fiat. No, we're talking crypto. Do you feel that Bitcoin has competitors in terms of one, not even Monero, that you seem to like now?
No, it's got the largest liquidity. It's got the largest wallet install base. It's got the best devs. It's got the highest security. It's got the most decentralization.
But that's almost irrelevant for the store of value function, right?
Oh no, it matters a lot. If people just change the rules of the system and increase the available supply of coins by 4, which they can do in a fork.
Right, but again, changing the rules of the system, that doesn't have as much to do with accessibility of liquidity, right? It has to do with the decentralization of the technology, which I know is influenced by the amount of accessibility to the coin. It's influenced by it, but it's not directly responsible for the changes.
If you can't trust the system from being changed, you can't store value in it safely.
I agree, which is why Bitcoin is again, right. So Bitcoin is the only real chance the entire crypto economy has at a store of value function. That's been my position for a while.
I think it's great. I hope Bitcoin crushes and destroys almost everything else. That'd be fabulous. I just think that if it has to only gain value on its retail adoption instead of being an onboarding to all these other stupid coin ideas, it's going to take a year or two longer to get anywhere, because we hit all-time highs when those other coins hit all-time hype. And if those other coins stop existing, I think it's going to slow us down a year or two.
I don't think we hit all-time highs when other coins hit all-time hype. I think Bitcoin hit all-time high when Bitcoin had all-time hype, and Bitcoin had all-time hype when Wall Street futures were launching. Altcoins hit all-time hype when Bcash showed up and a lot of prominent people with megaphones switched sides, and Ethereum started launching in a reasonable amount of ICOs. And remember, SEC is going to come in with the hammer, that door which he had. So I can't wait to watch that fall out when a few prominent lawyers and advising firms get arrested first. Let's see what happens with the ICO market.
I don't think that's going away. So for instance, the powers that be try to shut down all kinds of things. As long as there's enough money, they don't go away. So if you want to buy weird things on the internet, they come right to you in the mail. If you want to gamble on the internet, no problem. Some problem. I mean, they can
right, but Bitcoin solves this problem better. You can argue that Monero can solve the problem better, but Bitcoin's liquidity outshines Monero, even if Monero is a little more anonymous today.
I'm a maximalist. I want Bitcoin to win almost every single thing. I would be happy for anonymity to be built into the protocol. It would be fabulous, right? So I agree with you. I used to be 100% on board with every single thing that you've said. And since I have understood that we do need alts for some things now, and that's the only thing that changed. I mean, I still hate 99.9% ICOs. I still think they're all terrible. I think Bitcoin's got the largest liquidity, the best security, the most decentralization, the most Wall Street onboarding, the most regulatory certainty, the best advertising, the most Google searches. I go through a list of how much I love Bitcoin. And so my position used to be identical to yours in all ways. Only differences now would be, Monero's cool. I think my token will be cool. I think Ethereum has use cases. If you want to see things that compete with Ethereum and are better than Ethereum, well, it's handy to have Ethereum now to launch those things. And then and everything else is about the same. I think, there's not that much difference.
All right. So speaking of the 0.01% of ICOs you don't consider scammy, This is a perfect transition.
Hit refresh. That's an old version. Just F5.
This is from like a week ago.
Yeah.
Oh,
I updated. Looks cooler.
Not a week ago. This is from before you and I were supposed to do it. This is from like Monday. All right. So speaking of the 0.01% of ICOs you don't find scammy, this is a perfect transition to talk about the CFD token, which I have recently learned stands for current fluid dynamics. Computational fluid dynamics. Sorry. Yeah. Computational fluid dynamics. When anytime I see the letter CFD, it's for me, it always stood for contract for difference. Yes. From the financial space. I think I said credit for difference. I meant contract for difference, like the curse of a live YouTuber. So in my experience, every single person thinks that all the other altcoins and ICOs are scammy except for theirs. So it's time for us to jump into this. I guess I'll give you the floor. You can explain it. You can talk about this gentleman, and I will try to throw some critical questions at you.
Sure.
So I give you the floor.
Yeah. So if I run calculator, so I'm gonna use a Socratic method here, where I just ask you some simple questions. It's kind of building yes momentum. It's cheating a little bit, but I think it'll work.
Were those the questions you sent me in a private message? Should I pull that up? Should I pull up our Twitter?
If you want, I can just say them. You don't have to pull it up. I mean, you can.
No, I'll pull it. I mean, you still say it for the audio.
You don't want to see. Don't pull it up.
But, why?
Oh, you got a little screen. Okay, it's fine.
Oh yeah, no. I mean, like it's not going to be. It's just like that. Yeah.
So, if you're okay with me, so I'm going to still use the question format. Are you okay with me running calculator.exe on my computer? Is that okay with you?
On your computer.
Calculator.exe.
Sure. On whose computer? On your computer?
Yeah. Yes.
Sure.
Okay. And if I do 2 + 2 and hit enters and it says 4, you're okay with that, right?
On your computer, yeah.
Yep. Okay. So now, what if I asked a friend to do it for me? He could run calc.exe and do 2 + 2 is 4. Tell me the answer. Would that be okay?
Sure.
Now, what if I wanted him to pay him to do it? Could I pay him dollars?
What are you paying him in?
Well, I don't know. I'd give him $1 to do 2 + 2 is 4.
Sure.
2 is 4. I'd give him $1. Okay. Could I pay him in Bitcoin instead of dollars?
How did you get the Bitcoin?
I don't know. I bought them from Coinbase.
Perfect. Sure.
Okay. Could I pay him in Ethereum?
Sure, you could if you got well, it depends. Yeah, you can pay him in Ethereum.
All right. Can I pay him in an ERC-223 token on Ethereum?
See, this is
or some shit.
This is where we have a situation, right? Did you create that currency out of thin air, right? Like
no, it's bought an exchange. You can pick whatever ERC-223. So what I'm doing is I'm going from very vague and very simple to shrinking down to see where you fall off and draw the line, right? So this is going to get more and more specific until you go, that's my line in the sand. It's not okay now. So we understand your values, right?
Okay, so you go out and you buy an ERC-20 token to pay a friend to execute a 2 + 2 function on your computer.
Yep, his computer in this case. Yes.
Sure.
Okay. Now, what if that it wasn't a 2 + 2? What if it was more complicated? What if it was, I give them a nozzle and that nozzle shoots out a spray and I want to see how fast the spray goes? A computational fluid dynamics problem, right? What if I replaced the calc.exe that he was doing with a more complicated calculation? Would that be okay?
Okay, sure.
All right. So now what if I didn't pay him on dollars, I didn't pay him in Bitcoin, I didn't pay him in Ethereum, and I didn't pay him in some other ERC-223 token, like, I don't know, EOS or whatever. I paid him in CFD tokens instead that had no value whatsoever, just like Bitcoin. Just like when people started mining Bitcoin, it had no value, but they mined it anyway. Or just like when I was mining Ravencoin for fun, because it just came out, and you could do it on CPU, and it had no value. I mined it, right? So what if I gave them a valueless token for doing that work? An ERC-223 token. Would that be okay?
This is where it starts to get this is where it starts to get murky.
Well, it's not murky. There's a guy. He's got an exe file. He can double click it or not. If he double clicks it, he gets some token that's worth nothing. If he doesn't double click it, he doesn't. Now I've double clicked lots of exe. I've done it on testnet for Ethereum, and I've done it for this Raven coin that came out, which is a Bitcoin fork. Valueless tokens. Okay. So is it okay? Can someone double click an exe and get an ERC-223 token that's worth nothing? I know you want to say yes, but you see that you're falling into the hole. You see that the noose is getting bigger.
Not really. Not really, right? Because it comes.
So just say it's not okay then, and we could figure it out.
Well, that's the part, right? That's the part we're going to talk about, right? So, I mean, we didn't have to go through that exercise, right? I mean, maybe we did for other viewers. You didn't really have to go through it with me because I know where my line is on altcoins and other stuff.
So is it okay to mine Ethereum? Is it okay to be an Ethereum miner?
It's perfectly fine to be an Ethereum miner. I don't have a problem with Ethereum miners. My problem with Ethereum is the pre-sale of the 72 million Ethereum tokens that nobody mined.
Yeah, it was an ICO. I know.
Correct. Right.
And the SEC could have treated it differently, but
they still could. Like that, the jury's not out.
To treat the DAO differently as well.
Correct, but so my line is fairly clear to me. So the question is, your token is a straight up proof of work token where even the first block is going to be open for anyone to mine.
Well, see, so in the first iteration, it is not a blockchain. It just piggybacks ETH like everything else, right? Kind of. So if you want to use ETH safely, you have to use the minimum parts of it possible, or you will die to bugs, right? So what's the minimum amount you could use Ethereum? You use the audited contracts, which are the ERC-20 and ERC-223 contracts. Not even sure about the auditing of the 223 yet because it's rather new, but it cuts your fees in half, so it's cool. If you just use the ETH ecosystem to move around your little sub token, that's the minimum exposure you can get to that ecosystem. If you keep all the business logic on your end, then if ETH sucks, you can rotate off of it. If you want to launch your own blockchain, you can rotate onto it. You know, if the blocks fill up, whatever, we can queue value here and keep working. And then when they're unfull, we can use them again, right? So keeping all the business logic centralized allows you to, one, have a proprietary software that protects your core value so that not everyone can fork it, just fork you into nothing, which never happens anyway, but people are still scared of it. Two, if Ethereum sucks and the blocks fill up, you can just use something else, right? So in the first iteration, we're just paying miners to run a different EXE than the bullshit they normally run. So if the bullshit you normally run is Equihash for Zcash that only uses 3.6 of its network to actually shield anything. Power, the hundreds of millions of dollars that goes into mining Zcash for no positive result. No one's using the anonymity function. 3.6% of the network is anonymous.
Well, okay, we're getting slightly off the topic here. Okay, so it's back to my original question, right? Like, first of all, you don't control whether this token is worthless or worth anything. It'll depend on the 12-year-olds that are dumping it on Poloniex right now.
If it ever gets listed, sure.
Say again?
Yes.
Right. So again, if you are morally okay with that, that's fine. I'm not going to judge people for it, right? Like, I'm not going to judge people for creating something that gets to be traded in an unregulated way by unqualified people. That's up to their own, self morals. That's okay. I'm not here to judge. But my other question is there any kind of a pre-mine, or is the very first Genesis block open for anyone to grab? What's the reward structure? How many, how often are the blocks? Again, like the general.
So there's no blocks.
There's no blocks. So
there's no blockchain. There's no difficulty, right?
Okay.
It works like this. If you double click your Monero miner.exe, you're going to get Monero tokens for running .exe. And you're going to get them as a proportion to how much power you have in the network. So if you have 1% of the hash power, you get 1% of the tokens. It works that way in Bitcoin. It works that way in Ethereum. It works that way in every cryptocurrency. Double click C, you get those tokens in relationship to how much power you compared to the rest of the network. We do the exact same thing, except instead of doing useless, stupid bullshit SHA-256 over and over and over and over again, or cuckoo cycle equihash, or other stupid, wasteful things, we replace all that wasteful bullshit with useful bullshit. But here's the difference. In order for us to pay you for doing the useful stuff, we have to use another network to handle the money management stuff because it's easier and it's faster, right?
Well, so, and that other network is Ethereum.
Yeah.
Right. No, I'm not fighting you on that part, right? And whether your fluid dynamics computation is more or less useful than Bitcoin mining is debatable. I'm not here to debate that either.
Well, it can't be worse.
It
I know exactly what the Bitcoin mining leads to. It leads to heat.
Well, no, I can explain to you how it's more useless than the Bitcoin mining, right? Because if Bitcoin is to become this new government-resistant value transfer, it needs to be as secure as possible with the most amount of hashing power. So to me, it's not a waste of burning electricity for Bitcoin because you're securing a brand new store of value, the likes of which the world has never seen. To me, that is very valuable. And to me personally, it's way more valuable than, I don't know, new innovation in fluid dynamics.
Do you remember when Bitcoin lost half of its hash power to Bcash and then failed? Or did it not make any difference at all?
It made a short-term difference because of greedy people, and it wasn't 50%. It was less than 50%, but it was a minor.
Over half of its hash rate numerous times, and it's never fucking mattered. And if it's never mattered, to some degree it's security theater, and to some degree it's insurance, right? So as long, and by the way, if having a shitty low hash rate was a problem, why isn't Bcash getting fucked up right now?
Because not enough people care to screw it up, right? I mean, I just joined the recent discussion. We just did this yesterday. It was like a podcast I've never been on before. I just joined the discussion. Some guy wants to build a complete perfect duplicate of Bitcoin as the second best crypto out there. And it will literally be like the Bitcoin testnet, only he wants it to have real money so it can't be reset by developers whenever they choose. So basically, it's like literally a brand new Genesis block of replicating everything that Bitcoin did to be the second best crypto. And this is how he decided to use his, supposedly very good skills as a developer. And one of the goals is, if I can steal hash power from all of these crappy altcoins onto my altcoin that doesn't do anything different than Bitcoin, it would be a good thing for the Bitcoin network. Now, there's two obvious arguments there. One, how do you control that you're going to steal hash power from these crappy altcoins as opposed to stealing hash power from Bitcoin itself, thus weakening Bitcoin a little bit? And second, if your goal is to destroy these altcoins, why aren't you just trying to infiltrate their open source development, kind of like perhaps Mike Hearn did that he was accused of, and try to destroy them from within, right? So, the answer to the second one is no one cares enough to screw around and destroy Bcash, okay? Like, for example, if I had the financial resources to help the global crypto ecosystem, I would open up an office, maybe not in New York because New York already has one. I would open up a little office, kind of like what Jimmy Song is doing, and provide a space and maybe sponsor one or two core developers that I want to pay to focus on Bitcoin core development. I'm not going to pay the same core developers and give them the task of infiltrating Bcash and destroying their development from within. It's not a good use of the money to go destroy something versus helping something for ethical people.
I think that if you set to violate other people's freedom of association, it's pretty unethical. So, I mean, I don't think it's ethical to try and pollute and destroy and underhandedly screw up other people's projects. I mean,
well, and this answers your question, right? How come Bcash hasn't been destroyed yet with their shitty low levels of mining? And the answer is nobody wants to waste that energy doing it.
No, the answer that Andreas gives is very simple. It's just not profitable. So if you attack something by hash rate, you have to buy the hash rate.
Yes.
And you could have earned Bitcoins and be given the Bitcoins by just honestly mining instead of trying to mine and change consensus and double spend, right?
It's the same answer. I'm giving you the same answer. I just stated it completely differently, but it's the same answer.
Yeah. So my point is, if 51% attacks are never profitable, and if these hash power attacks almost never occur, except Aurora Coin, a couple others that were minuscule, then it is security theater, right? But it doesn't matter because we're using this security theater to send money around for our token anyway, right? So I prefer.
Well, in a way, we're using the security theater also to create more confidence in Bitcoin network, getting new people to buy in and using it as a store of value, right? Sometimes you need security theater to create this confidence. I mean, how many people were quitting their jobs and starting and moving everything they do to the internet? I remember one my friend is like, oh, like he opened up a bank account with the Bank of the Internet back in like 2001. And he's like, no, this bank has no branches. And we thought he was crazy. And a lot of it had to do with he felt the internet was more secure than the rest of us did. I remember my first friend that bought his first book from Amazon. This was like 1996 or 1997. And we thought he was crazy. Why would you buy a book from Amazon versus going to the college bookstore? So again, it's confidence. And confidence goes a long way in all systems.
So I think that we can agree that if I wanted to use Bitcoin to pay people to run an EXE to compute stuff, you'd be okay with that.
Sure.
Okay. And then all I did was I just kept moving that goalpost. I'm paying them in cash, paying them in Bitcoin.
Until you get to the goalpost of paying them in a currency that you create. And the question becomes, is this currency you're creating being created fairly, or do you have some kind of an advantage? Examples, Dash, Ethereum, Steemit. I can go on and on and on. So the question is, what happens off of the first Genesis block? And is this coin, do you have a mining subsidy like Zcash, right? I mean, that's where I'm getting at. Like, how fair is your coin? Because Satoshi made it as fair as possible. And at the time, he had the advantage because it actually was worthless.
He didn't make it as fair as possible at all.
It was a special case because at that time, it actually was worthless. Your token will not be worthless for a year and a half. Your token will be worthless for about 20 seconds.
So if I had these answers for you, I would already be sending my giant mailing list the beta PDF of tokenomics, right? I don't actually have these answers. I don't know how many tokens there will be in total. I think it'll be 1 billion. Because if I go larger, exchanges have a problem interacting with it. And if I go smaller, we have a unit bias problem, right? Some of the metrics we're copying from Bitcoin just to make it simple, but some of the metrics in Bitcoin aren't simple. So like the 21 million limit, that's a stupid number. I know that he derived
it's a random number.
It's not random. He tried to mirror the way the gold was mined. So he actually looked at how.
I mean, the 21 million part is like he could have picked any number he wanted.
Yeah. So I don't like that number. I like decimal. I like tens. So I'm trying to stick everything to ones and zeros to make it simple, right? So like most ICOs and projects try to overcomplicate everything to make it very hard to understand. And if I wanted to do that, right? If you look at my title of my page, it's pretty complicated looking. Right?
I agree. and
then if you look at the PDF that's 119 pages long of the actual CFD EXE that they're running, that my rocket scientist co-founder wrote and has used to do multi-million-dollar startups, one of them's a touchscreen manufacturer that's worth 50 million US, et cetera, et cetera. It's nearly Greek, right? So like I could overcomplicate this to the point.
You already have overcomplicated it more so than most.
No, not true. It's just an exe that you double click. You don't need to understand anything else. It's an exe that you double click. And if you double click it,
not him.
That's it, right? So in a normal mining ecosystem, you double click an exe, you get tokens.
All right, no. Oh, wait a minute. I'm not going to let you. I'm not going to let you cup out of it like that.
Okay.
Just because it's easy to click an exe, it's also easy for me to click an exe with a macro in it that I get in my email account every day. That's going to give me a virus that will destroy my computer, right? Like it matters a lot what's on the back end. And Satoshi's white paper wasn't 180 pages; it was only 8 pages. And it described the mechanics inside of it. Even if the execution of those mechanics was significantly more complicated than clicking an exe, right? Like it matters a lot what's inside that exe, way more than the process of clicking it. Like in fact, I would say
I could explain that in a way that you'd understand if you want me to. It has nothing to do with tokens, but I could explain what's in the exe if you want me to. But it's just not it's not relevant to miners. Miners double click things that they don't understand, right? Like if I told you that the Equihash algorithm that supports Zcash is memory latency hard, and then explain to you why that's different than memory bandwidth hard, why it's different than raw processing dual round SHA-256 hard, I could explain all that to you, but it wouldn't get you more tokens. It wouldn't help you be a better miner. You'd be better off learning how to overclock, right? So like I could explain to you how CFD works and why this EXE is better than other ones, but it wouldn't tell you whether it was a fair distribution of the token, right? So I'll explain to you what CFD is real quick. You have the world. The world's super complicated, right? If I exhale, the air is just air. It's some parts air, some parts water, it's some parts nitrogen. It's a lot of stuff going on there, right? And so we've got these Navier-Stokes formulas, which allow us to take the real world and digitize it and understand it, right? So turn it into numbers in that case. So here's our gases and here's our aerosols, which is called multi-phase. It means that everything's not in a single state, right? And then it's sub-supersonic because matter acts differently at the speed that it moves. And then we put all that to these Navier-Stokes formulas. But we can't put them into the formulas until we take the space and mesh it and cut it up into little pieces. So all CFD does is it takes the real world, it cuts it up into little pieces, it sticks it into the computer, processes it, and then tells you what's going to happen. So if you build a spaceship like SpaceX does, so like the next video down there is a SpaceX video on how they use computational fluid dynamics to create rocket engines. So when you create a rocket engine, you can't have it inside it. It gets melted. You have to model it in the computer before you build it, or it'll never work, right? So computer modeling is how we do plasma fusion containment. It's how we build better wings. It's how we build better helmets. It's how we build better spacecraft, aircraft, weapons, heart valves, right? All this stuff is what CFD does. There's only a couple EXEs that you can run to do it. And the biggest one that everyone uses right now is called ANSYS Fluent, and they've got 90% market share. And they don't make progress because they're a big-ass monopoly. So this whole branch of science of making better stuff through doing CFD computation has a very available, and they're very expensive because there's a monopoly player. We've got one that does stuff other ones don't. Great for aerosols, great for multi-phase. It does a bunch of really cool stuff, but the problem is right now it just lives on this super genius's computer. It's got 250 patents.
All right. So how is this different from like the protein folding proof of work blockchains that we all, were promoted back in 2013?
So the problem with protein folding is it has no commercial value. You can't actually use it to generate anything. The folding at home project was designed to improve the digital model that would run computation to figure out what really happened, because it sucked. And so because they kept running it and running it and running it, they could make the math better to make the math that you use in your computer try and accurately represent what happens in the real world. And because it's on such a low time scale, it's hard to do. The other problem with those projects, in addition to no one being able to make any money on them, was that you had to do the computation 3 times. So when you ran folding at home, the problem that you were solving, two other people in the world were also solving because they couldn't trust that you were doing it right. So an evil person could lie or overclock a computer too hard and give bad data. And the only way they had to catch that bad data was to do it a couple more times. And that's not even that secure, because you could get Sybil attacked and some evil person could become 2 of the 3 quorum and then lock that bad data into your science project forever, which would be tragic. Now, in our system, we're very lucky because we have about a 1,000 ratio where whatever you did to arrive at a solution, we can verify that 10,000 times quicker that it was accurate. And we don't need to triplicate the work across things. So if you wanted to understand a system, it's folding at home, but with commercial value and without replication. Or it's SETI at home, but with commercial value and without replication. I'm not sure if SETI did replication, actually.
Well, it's not more for me to understand the underlying system. It's for those that are smarter than me that have the ability to validate what the underlying system actually is. I do not have the mental capacity to understand the dynamics of computational fluid dynamics.
It's not that hard. I mean, it's just like here's reality. Reality moves around. Here's the best model we have mathematically. Here's the Navier-Stokes formulas. Here's how we cut the problem into parts so it can get done. Right? It's really not that hard. So the summary is, if you want to mine Bitcoin, you double-click your Bitcoin miner exe. It does a bunch of SHA-256. You get Bitcoin tokens. If you want to mine Minecoin, you double-click our cfdminer.exe, and you get paid the CRT223 token instead. Same crap, right? Different ecosystem, except ours will build space travel, and the SHA-256 one just builds heat because it's supposed to, because it's more secure, right? I understand the more wasteful it is, the more secure it is. I get that, and we're not using our computation to secure a blockchain, so we don't need to burn the electricity, right? We already now ETH is our electricity. So,
and you're going to be rewarding them with this coin, right? With CFD.
It doesn't have a name. Like, we're not going to have the CFD ticker because a failed crappy project called Confido, which was a legit scam, took the CFD ticker on a couple exchanges. So it's not even going to have that. And then this project
again, the name of the token is almost kind of irrelevant. You can try to name it Fluid or whatever, something with an F, right? That's, I mean, we're talking little tiny details, right? I'm just talking about the dynamics of the token. So you're going to reward people for running this, I guess, computation.
Right, exactly.
Right? And the code is going to automatically reward people for what? The more they run it?
Exactly. Right. So what
is there going to be competition for running it, or running it gets you X amount?
No, there's competition. So this would look just like Bitcoin. This is one of the innovations that my project has over other distributed computing things, right? So there was an ICO for a thing called Sanem. There was an ICO for a thing called Golem. There's a project called Gridcoin. There's other projects that try and do this distributed computing thing with a token, but they're all retarded. So Gridcoin failed. They tried to piggyback on top of Blink. Blink's not secure. People are getting their accounts stolen. It failed. Golem and Sanem currently are pretty much unusable.
All right, Richard. We're getting way off. Like, I don't care about other projects. I only care about yours, right?
Sure. Well, the innovation is that I don't run an order book. Those projects will stay failed because they wait for work to come in, and then they go, "Hey, we got work. We can pay you now." So they can't prime the pump. It's like trying to start your own eBay. You're like, yo, I have no one visiting my site. Do you want to advertise? No. Okay. Hey, I've got no advertisers, no purchasers. Do you want to list things? No. You've got to prime one side of the pump, right? So my innovation is the same way that Bitcoin got primed and people mined it for these fake tokens that had no value until one day they did. We will be mining busy work and rewarding people with tokens to build up the network structure. Right? And since they're only going to have to pay to outcompete other people, there's not going to be such a high price because we're going to have a lot more computation ready and waiting than we have retail adoption, because it's easier to get miners to mine anything and double-click EXEs than it is to get scientists and engineers to learn a new system, right? So we have to have a strong network to bring down the price of computation and make it very affordable to onboard for those more difficult parties, which are the miners and the scientists.
But you're not going to be able. But now you sound like Dan Larimer a little bit, where you think you can control the proper diffusion of this token based on the amount of computational work you're expecting on your token.
Well, here's the thing: it all self-balances, just like the Bitcoin network, right? So is the Bitcoin network?
Wait, I gotta take like a 3-minute break. I'll let you talk about this. I won't be able to hear it, but you can explain to my audience, and then I'll jump on to the next question.
So that people can see me. Or am I screwed up on my side?
Your audio is a little bit flaky. I'm assuming it's yours because I've been podcasting like an animal and I haven't had these issues. But it's not too bad. You break out for a little bit, very rarely, not a big deal.
I can't change anything, so I hope it turns good.
I'll let you explain how you will not be in control, like constant Dan Larimer attempt at keeping a stable currency. But he tries to keep a stable currency value. I don't think you're trying to create a stable currency value, but you're trying to create a bunch of dynamics in order to
I need my value to go up, so the mining power goes up. So
I'll let you explain it to my audience. I'll be right back in a minute.
Yep. So in Bitcoin, the hash power reflects the value of the token. The more expensive Bitcoin is, the more hash power gets dedicated to the network. So by copying that system and running SHA-256, you run CFD miner EXE, you get rewarded as a percentage of the network. So if you're 1% of the network, you get 1% of the tokens. If the token value goes up, everyone starts adding more computers, more processing gets done. That drives down the price for the people that want to get science done. And so there's this ratio of they don't have to buy as many tokens because they're only competing versus other scientists for the network power. However, the tokens get more expensive the more the demand is, and then it self-balances, right? So if the token value goes up, more people mine it. That extra hashing power drives down the cost of computation for the scientists. Then the scientists buy the tokens to get the work done. And if they have to compete a lot versus each other, then it drives the price of the token up. And then as soon as that happens, the mining power increases. And it all self-balances, right? Just like Bitcoin. So the innovation in this system is that we use the same type of mining tokenomics ideas that have worked in all other peer-to-peer blockchains, instead of the retarded order book where you only get miners to, if you run an order book, here's people that want work done, and then here's people that can do it, and then let's try and find a price, it's terribly stupid. It's much easier to have them mine and have them waiting.
Right. So sounds like the idea is you want this token to have no value for as long as possible before there is enough of it out there to kind of get a market value.
I think that it depends on how the launch goes, right? So if there's a SAFT contract and there's like a flat fee fixed value for the token to get it, then that sets like an anchoring point that may be reflected in secondary markets. But if that didn't occur, and if it was just if there wasn't a price set and it was just off the bat, we would get a ton of people mining it because everyone mines everything. If there's
you just said if there wasn't a price set, does that sound like you have a price set?
Well, I haven't decided. I mean, I could do a SAFT. I could do accredited investors only. I could wait and build the project out and just sell it as a utility token when it already works, because we're already so far along into it. The CFD code's done. We've already got the database schema. We've already got the logins to the central server. I could just build it out with the single dev that I have now and myself. We could build out much of this in not very long. I could do it as a fork of Bitcoin and make our own blockchain and just use that blockchain to send around money, and then isolate the CFD into so the CFD project just basically looks like a big mining pool. You log into the mining pool, it gives you work, you do the work, you get tokens. If the mining pool goes offline, you don't get any work anywhere, right? So the whole project just looks like a big mining pool, but we're not mining Bitcoin, we're mining science, right? And then we're not paying people with our own unique token on our own blockchain, we're paying them by ETH. However, and when I say ETH, I mean our own ERC-223 token on ETH. We can transition into a full blockchain replacement. It is much harder, and I saved that for the last phase, right? So I've got a white paper that states that the problems that we're solving can be used as a useful proof of work with contingent proofs and some zero knowledge stuff.
Well, when is that white paper being released?
That one's already done. I mean, I could link you that one, but it's so far out. That's so much harder. That's unnecessary. It's just easier for us to run a mining pool that does mining, pays people ERC-223 tokens, and we're in business, and science is getting done, and I don't have to fight the blockchain battles, right?
Right, but that's the thing, right? Like the moment the CFD token is out there, it goes to Bittrex and people trade it with whatever they like, right?
I've never launched an altcoin before, so I don't know how easy it is to get listed. I don't know how fast things get listed. I would assume it would be very simple and very easy because it's just another ERC-223 token, or I'll just call it an ERC-20 because people understand it better. You know, that ecosystem turns on new tokens all the time. It seems like it would be very simple. If our token has low value, it will have low miners. If it has low miners, it has low utility to science. If our token has lots of value, it'll have lots of miners. And it'll make the computation cheaper for the scientists, and it'll have more value. So my preference would be that the token has all the value possible so that we have the most computation possible so that we can get the most science done. And as long as people have an easy, affordable way to get computation done, they're going to feed it work. Why not, right? Because like when you give a scientist the ability to get more accuracy and his only cost is money, but the money is free, he's going to choose the most accurate possible. He's going to choose the highest sampling frequency. He's going to choose the most dense mesh, right? So in this project, a higher token value has a ton of utility. And so it is something that I'm concerned with.
All right,
so it is low token, it.
All right, so it looks like you actually don't have enough details on the token itself, so we might have to do one of these again, either right before you launch or right after. I can easily go out and buy it, and then we can talk more about whether it is or isn't a security or all the other things. But let's quickly, because I do want to, I'm not going to make this go more than 2 hours, so we got about 15 minutes to go. Let's briefly talk about your genius scientist, David Brown, PhD. And what can I click on here that would allow my readers to do more research on him? Because when I clicked on the very last
resume,
I got a page not found.
Well, it should be a YouTube video of
but it's not there.
Yeah, I'll get it fixed.
Okay.
Click his resume.
Which is what?
He's got 250 patents. I don't know, maybe that yellow link under his face. The little yellow page thing.
The
yellow.
Yellow.
Okay, try the blue one.
Okay. Oh, not what I meant to do. Hold on.
Yeah, you can Google the crap out of him. He's got 250 patents.
There you go, guys. If you are in the mood to do some research, here are the details of David Paul Brown, and you can take a look at his history, all of his.
So like the startup that he's done that has, this software that we're using for CFD, he's used that to generate successful companies multiple times. So he invented a touchscreen technology that's rolled out on a film, and it's more clear than other touchscreens. So if you want to make a touchscreen, you have a conductive piece of clear material that you can measure capacitance in, and then that's how you know where your finger's at. He invented that by rolling out a film and then using a vapor deposition, I'm probably saying that word wrong, to put the carbon on there to make it conductive. That whole process was modeled using the CFD software, and that company's worth $50 million now. And I visited their factory. There's a real factory, it makes real touch screens. It's called Canatu, C-A-N-A-T, Canatu, C-A-N-A-T-U. And he's got, other startups like a fiber optic cable and another one, inhaler. These are all things that he's invented and modeled and created using the software that only he has access to. So this isn't some untested bullshit that is in la la land. This is real software that really does break through things that are patentable and worth millions and millions of dollars. And you can go see those inventions in the real world, right? So it makes this project a lot easier because most of it's already done. The software that we want to run is done and has been done for more than 10 years. He's used this originally created for rockets to do modeling for NASA, and it's been used a lot. It's just he's the only guy that can use it right now.
And how did you end up in contact with this guy? Did you reach out to him? Did he reach out to you?
I was at a business conference, and it was the after show, and he was walking around with a bottle of Absolute vodka, and I just said hi, and we hit it off. And he's, all my friends turn out to be like hyper libertarian, and I don't know why, because I'm not hyper libertarian. I'm like socially liberal and fiscally conservative, I guess. I don't know. I believe in free education and free healthcare stuff, so maybe I'm not even fiscally conservative. And we just became friends, and we kept in touch for a very long time. And he's done so many cool projects. I really wanted to work with him. Like his battery project's amazing. They make batteries not out of lithium, but out of salt. Pretty common element, right? And they work. They have a higher energy density than lithium ion, and they work at higher temperatures. So, right now he's just spending most of his time at a very large aerospace manufacturer, which I won't mention because I don't know if I'm allowed to. But since that company is investing in him, he'll probably do a press release about it. The guy is just a polymath. I'm a pretty smart dude. I'm in Mensa, and he makes me look like a retard, and I love that. It's such a privilege to be able to talk to a guy that you can learn from, right? Like he understands things at a degree that I never will. Like that white paper, if you click the 119-page white paper, for giggles, the audience should see this, right? Click the 119-page white paper that he did. It's down at the bottom of the main CFD token page. It is so complicated, I don't recognize the majority of the symbols in it.
What am I clicking? Is it under his profile?
Go to the very bottom.
Very bottom.
Yeah. Should be conclusion.
In the frequently asked questions part.
No, just Control F, conclusion.
Got it. That was above the team. Okay.
Yeah, that PDF. It's his presentation on this this CFD solver that he's written. That's the intro that I wrote that just kind of explains the token to normal humans. This is my copy on why CFD is so cool. And now this is all his stuff. And as you scroll down into this, it becomes la la land. If you're not a physicist, you're not going to understand it.
All right. Well, we got about 2,000 live viewers on my channel.
Yeah.
And hey, maybe somebody's a physicist has time in their hands.
Yeah.
Check this out and feel free to comment. But
I wish I had more tokenomics for you to like attack, but I just don't have those answers yet. You know what I mean?
Yeah. You don't have the token details yet for me to pick up. So
yeah.
we might have to do this again. But tell me something about your CTO.
So everyone finds me by like a different vehicle, right? Like some people originally found me because I was writing dissertations on how I hated Ethereum. Which is funny now, right? Because I have to clarify, like I hate most of it, but if you use just a little sliver, it's okay. And then some people, I think Kieran found me through hating on Byteball because he was building a directed acyclic graph project at the time. So he's kind of an expert on that. And, he was working with some other startups, bad business models. And I explained to them why their models were bad. And then we just got into talking, and I was like, hey, man, I have a good business model, and what you build here will get used in the real world, and you can make a difference instead of just doing crap that's not going to go anywhere. And that's the life of most developers. Most good developers, what they build, if it's good, still doesn't go anywhere because it gets screwed up by not getting to market, not having a good user experience, all those things, right? So our job actually is very simple. We have an EXE. We give it to people. We get a result. If the result's good, we give them an ERC-223 token. It's very actually simple. So our job of building this middleware, this mining pool that hands out ERC tokens when good results get handed to us, it's not actually that complicated at all. It's actually very simple. So we could build this in a very short time frame and have already built parts of it. just because he was writing code faster than I was writing sales copy, right? So his ability and desire, because I was so focused on Bitcoin price, we literally were getting more coding done and building more infrastructure and more testnet stuff than I was writing, hey guys, this stuff is cool, right? So I think for some weird reason in the ICO space, people just collect names and faces and slap them on there. But there's nothing that those people can do but drink coffee. Every real startup in the real world starts with 3 to 5 people, period. I don't give a fuck what it is. Skype, Google, everything, right? There is not 40 people worth of work to do here, right? It's just
in Ethereum there was.
Well, that's a much harder project, right? Like we're not doing cutting edge science here. The cutting edge science is in the CFD stuff, which has been done for 10 years. We're just building a job server and moving an ERC token.
All right, and to me, again, this is gonna have to, because to me, it's like you're paying them you're creating a quasi-currency, quasi-security to pay people what you feel will benefit the world, but you're still creating that value out of thin air, which is what Satoshi did. He decided to pay people a brand new currency, but he never hid the fact that he was creating a currency. And that's the difference between Bitcoin and Ethereum. Ethereum has an identity crisis. Is it a currency, or is it a security, or is it a application token, right? And this identity crisis plagues 99% of everything in crypto space. Now, it doesn't plague Monero, it doesn't plague Litecoin, but it plagues everything else that wants to be a currency, a security, and a commodity, not a commodity, and a application token at the same time.
I wish it would plague Bitcoin too. I wish it would plague Bitcoin too. I wish.
Right, but it doesn't, right? And that's just what I like about it. But your token will have this identity crisis.
I don't know, man. I mean, so like, if I'm okay, if it's okay to pay people money to run an EXE, and it's okay for them to run the EXE for free, it's probably okay to pay them Ethereum. It's probably okay to pay them some other made-up token. I think that's all totally moral and ethical and cool. And if the stuff that's getting built is cool stuff, that's even better. Watch the SpaceX video on how they use it. It's neat. And by it, I mean their own CFD. They use a different meshing process than we do. They use wavelet. We don't. This whole, you've never heard me say anyone's going to make money buying this thing. You've never heard me say that anyone should buy it. You've never heard me say anything.
Well, of course not, because if you say those things on my channel, then my channel will be used by the SEC to arrest you, right? So you can't say those things for personal preservation more so than for reality of the situation.
Well, I mean, even more than that, there's not even a white paper yet. So I can't even tell you what the inflation rate looks like. I can't tell you what the slowing down of minor payments looks like over time. Is it happening every 4 years, or is it every week, right? There's these really important metrics that matter a lot as to whether you should participate in the ecosystem or not. And I have to generate those solutions, right? I have to make those decisions. And I can't make any forward-looking statements without having those decisions made. So regulation aside, I'm just incapable of making those statements, right?
Right, and that's the thing. And at the end of the day, what a lot of these token creators and ERC20 or whatever you're using, not a ERC20, you're using
223. It's just half the fees. Yeah.
I don't even know the difference, nor does it make that much of a difference to me. But what at the end of the day, these people don't realize, it's not what they think their stuff is. It's what the regulators and the government decide what their stuff is, right? Like when the DAO came out, I have public tweets. The moment the DAO was first introduced to the world, I'm like, this is a VC fund. And the DAO brass, the DAO C-level managers
were much worse.
Right, it's worse, but at the least, it was a VC fund. Like from a conceptual financial perspective, it was a VC fund. And I publicly have tweets saying, this is a VC fund. And I have a tweet making fun of them saying, just because they say it's not a VC fund doesn't make it not a VC fund. And then it took 2 years, but eventually the government published their statement about the failed DAO. And in a little fine print, and I tweeted out that picture, the SEC clearly states the DAO was a VC fund. Like, I knew it. Anyone with half a brain knew it. But just because they said it wasn't, it doesn't mean that it's not. Now, I'm actually a little upset that these fools didn't get arrested for running an illegal VC fund. They should have. Maybe it would have taught a lesson, right? But that's basically what happens, right? So what you say your coin isn't doesn't really matter.
I know what's up. I've read all the stuff. There's lots of stuff to read. Basically, the things that you're saying, I think you want to occur because, one, you hate scams, and two, you think Bitcoin price would be up a lot higher if people weren't wasting their money on scams.
Not necessarily. Not necessarily. Like I said, I think that Bitcoin is underpriced according to alts, but overpriced in general, right? So if all of these alts weren't there, it's very possible Bitcoin would currently be at a lower price.
Right. So here's my take on the SEC. All they want is for everyone to get a fair deal. And part of getting a fair deal is to have accurate disclosure as to what people are getting. And there's some other rules in there, right? So over the years, they figured out that the public gets a better, more fair deal and less screwed over when these metrics are hit. There's so much money in the ICO space that people will just transition from being non-compliant to compliant. And you're still going to have the same hatred of the scams, because being a regulated security does not prevent you from being a shitty, fucked up business. Check out Theranos or Theranos, okay? Theranos was a shitty, fucked up business with a bunch of people that had nothing to do with the medical industry, a bunch of generals and people that went to Ivy League schools that had a lot of good buddies. And those were in the executive team. And then they had a fake product that didn't work, and they got shut the fuck down. And they were regulated security, okay? So my position is that even if we get all of the crackdowns and all of the examples made, there's so much money in this that you're just still going to see tons of bullshit bad businesses get funded. You're just going to still be fucking mad about it. So the SEC is not going to save you from being angry. You're still going to be very angry because the scams are still going to keep happening, even as registered securities. You know what I mean? Yeah.
No, I got you. All right. Well, I think we're going to leave it here. I was going to try and get to some of your, personal.
Best scammer in the world.
Yeah, I was gonna try and get into your personal controversies over your background. Yeah. I think we're gonna leave it here. It's been 2 hours. Maybe we can pick that up again. I have linked videos of people accusing you of your past and also your rebuttal to those. So I'll let people watch those and they can make up their own mind. You've already answered a lot of these questions. Again, it's not up to me to judge. I just present the information, try to do that from both sides, because, again, I try not to get into, well, actually, that's not true. I've ripped on people's personal backgrounds. But in this case, not necessary now. So I'll leave it here. Any closing thoughts? And might have to do this again.
Yeah, I guess I should have started with my objectives, but I'll definitely end with them. So the things that I care about are: go to cfdtoken.com. That's like CFD, Charlie Frank Delta, cfdtoken.com. If you want to get the white paper when it first comes out, the one that people probably care about if they're not physicists, stick your email in the box. If you want a free ebook, I wrote a 471-page dissertation on everything. It's about every good idea I've ever had. Money, power, respect, sex, drugs, rock and roll. It's free. It's called Survive.
And so that is also in the video description of my video.
Excellent. If you're crypto rich, donate to the SENS Foundation, SENS.org. What's better than being crypto rich is being alive and healthy and crypto rich 10 or 20 years from now. You might as well invest in the technology that'll save you when you need it. Don't be dead like Steve Jobs. Steve Jobs, smart guy, rich guy, dead guy. Don't be like him. Save yourself by investing in the science that will save your own ass. And if you still die anyway, maybe it'll save your kids. It's a good deal. I think that's it. CFD token, my book, invest in the science that'll save you. Thanks for having me on. I appreciate it. Bitcoin to the moon, I hope.
Yes, I agree with the Bitcoin to the moon part. Don't necessarily agree with others. Please be careful when you're investing in any tokens. I personally will not be investing hash power nor any Satoshis into the CFD token. I guess you all know my position on that. And we will probably be debating the relevance of the CFD token in the future. I have to decide on that one. Do I want to, promote any other token on my channel or not?
Your dudes are going to get scammed. They'll get scammed by the best. I'm the best scammer ever.
Yeah, you can go that route, right? If you disclaim that you're a Ponzi scheme, is that bad, right? The Triple M Ponzi scheme and others, like if BitConnect came out from the beginning and said, "Hey, we are a Ponzi. Please invest in us, but we are a Ponzi," would they be?
Russia that did that. There's a guy in Russia that straight up.
Yeah, Triple M in Russia. Yep, that's the one.
Okay.
Yep, that's the guy in Russia. Yeah. So please do all your research. Please make sure you read the 190-page white paper in full and understand it before you invest in the CFD token. I guess that's my best way of keeping people out of it. But yeah, we'll see where it goes. And it looks like your project is not that close to launching yet.
Well, I mean, I'm the choke point, right? These are decisions I have to make. There's legal ones. Do we accept Americans or not? Do we finish utility first? And what does the tokenomics look like? So I have to decide that stuff. I'm sorry, it's not faster. The Bitcoin price moving around kind of sucked up my consciousness for a couple months.
Yes, that's been sucking up my consciousness for 2 years. But
you didn't get fat. I got fat. How did you do it? I'm a comfort eater, and I needed a lot of comfort, so I put on 20 pounds. You seem to have gotten fitter.
A little bit, only because I haven't even eaten on a day like today. It's already like 2 p.m. So I'm doing like 3 podcasts a day. All right, man, I got to get going. There is something brewing. I'm going to tweet out something very interesting in about 20 minutes. I was just sent a very interesting document. And keep an eye on my Twitter. It's going to be very interesting. Let's put it that way.
All right, man. Later,
guys.
Ciao.